Hello guys, welcome to the Trading Parrot. I'm going to do the market close update. There has been some price action today. As you can see on the 4-hour, we finally broke out from the symmetrical triangle. This time it was from the downside. We went to around 81.2k. That was the low. We were looking this morning into liquidity. We apparently went for the lower liquidity. The lower liquidity was precisely at 81.6, but it was smaller than what we left around this area. We'll look into liquidity later and see if that's still something that we can achieve. Remember, for context, this morning I mentioned that symmetrical triangles on the 4-hour for Bitcoin the past 2 months have been really tricky to trade. And that is because Bitcoin has been doing a lot of sideways, and we have had to expand the triangles. Initially, they start very shallow, and then they start widening up. Let me give an example. For example, this is a breakdown, but now if price goes above the triangle, we're going to be forced to expand both the bottom of the triangle and then the top of the triangle in this manner. And then we continue in the same situation that we are still in a symmetrical triangle. It's just that it becomes wider. And why is price action doing that? Because it's just trapping further and further people, both on the upside and downside, as we approach Thursday. The final move on Thursday, that volatility that could come after the speech of Powell, we already know that there's very low likelihood that they're going to cut rates, but people are going to be paying attention of what he says, whether he gives a hint that that's upcoming, that's bullish, or no way it's coming next time. That is going to be really scary, right? So in that case, there can be volatility on Thursday, regardless of everybody knowing what's coming just in regards to the cuts. There's also QT, QE, that discussion hints around that could also bring some volatility and a final move out of this symmetrical triangle. The past symmetrical triangle was this one, and we kept faking out at least 3 times in a row before we had the actual move that was actually to the downside. So watch out for that. I think it's totally worth considering that maybe this move to 81.2 is just that. And then we go back up and we expand the top of that triangle with another fake move prior to the event. Okay, let's go into actually I want to see the RSI. So on the RSI, you can see that we lost the channel to the upside. This is significant breakdown in here. And also, if you can follow the crosshair in here with my finger I'm showing you, there is some sort of head and shoulders. If you look at the RSI in the past few days, it looks like a head and shoulders, and the target is the bottom of the RSI. It's an RSI of 17. It's a little bit exaggerated, but I just wanted to see where can that take us if we go to the lower band, the low band of the percentile, which is precisely the target of that, and that is roughly at around 72k. Okay. Keep in mind that it's just to have an idea of the range. It's not a forecast that we are necessarily going there, but what is reachable from here if this breakdown carries on and it doesn't actually produce a fake out, because I'm more inclined to the fake out. I'm more inclined that the price is going to come back up, hit the CME gap that we left 2 weekends ago, and the larger liquidity in close proximity to price. Okay, let's look at that liquidity. We're going to look at close proximity to price liquidity today. We're also going to look at the liquidity at around 68k. That's going to be longer term, older liquidity pools that do matter because they're becoming heavier and going against what I want. Because I say I'm fearing that 68, 69 liquidity pools are becoming just too heavy, and that is consistent with some news, some analyst that was also supporting the idea that on CME there's just too many speculators talking about being long, and Bitcoin tends to become heavier with too many speculators to the upside. And they are low leverage because they have liquidation areas at 68, but that also makes heavy the asset to move up. And this is just technicals, okay? There's still the general markets that today behave really ugly. There's still a lot of fears around general markets. And I wanted to cover a few more things in here. Let me see. Yeah, indexes. I'm going to cover indexes and then we go back to Bitcoin if you allow me that. So you can see gold putting new all-time highs. We are at 3,034. And what's new? Well, what's new is that we have this cup and handle on the other side that we cannot even measure because it goes the high from 55, neck at 75. So that's 20 points up, pointing at almost 95. Remember that my realistic target is a rally into resistance at around 86, 85. That's 3.5K, the bullish target. Hopefully, we're not going to break the neckline, right? The neckline is at 75. If we don't break neckline, there is no push to the upside, and that's it. We stop here. All right, next asset in here that I wanted to cover is actually not an asset, is an index, is VIX, the fear and greed, the fear index on the S&P. And you can see that after this impulsive move that we have the week of the 10th of March, then this week we came down to retest the range, that range that we have kept since June 2024. So this comeback in here, I say, I am fearing that this looks too much like a retest for more upside because we've been constrained in this range. We come back, we touch it, and we bounce off that. So the first attempt to break inside, I will say, is failed. Next week, maybe, just maybe, we can come back inside the range and cool down a little bit more. But if you look at the RSI on the top of the chart, you can see that is putting higher highs, and now we are just putting a low, a higher low, and above the neckline of the W pattern that we also spot in here for further potential to upside, which is not great for any assets in fact. And Nasdaq, it hasn't been great, and there's lots of fear. So whatever asset I look at, including Nvidia or any of the big ones, are all going to look like pending from a thread, and that's why Bitcoin and altcoins are being punished. Look at Nvidia; it didn't even go to my 0.3. It's just coming back in here. It can still go to 3, right? Because we are halfway the green next to that one. So general markets, in a nutshell, not looking so great. Fears of what is going to happen with the Federal Reserve news on Thursday. And let me go now into some data. Let's do some order book looking around, and then we're going to look into liquid pools, both long-term and shorter term. And I think I gave the impression that there was no alpha in the morning, but then now looking at the charts once again, I'm noticing that some things that I said play out pretty well. And I'm not talking about calling for entering a short or a long, but saying that some things were calling for a local top in here. How you trade that is your thing. I'm not going to take an action just from this small alpha details that sometimes I give, but I like to see that some of them are playing out. For example, I pointed out this morning that if you follow my crosshair in here and you look at the beginning of green and start to come back down on the price at the top of the chart, that is a local top. And so it is this area where we start topping on the green at around 5,500 on the net longs shorts delta on the lower end of the chart. And then today, this morning, we were topping in this area, and that was another local top. So that played out. So far, there hasn't been larger liquidation, so it's just sideways so far. Then we had this morning around midday, we have a decent amount of buying in here. That was just 0.11. Remember 0.2, we start taking it seriously, and the areas in green in the price are showing areas where we have more bidding. That means more limit orders below the price wanting to buy. And typically that is closer and closer to a local bottom, like we can see in the recent price action. But in here it was just 0.11. That is what's holding that current support that we have, and is flipping into red. So it might just go a little bit sideways for a little bit further. Let's go into the liquidity now, and we're going to look at liquidity, but in the longer term first, and then we look into the shorter term, the one that affects, the one that shows overlapping with CME gap. That's going to be next. In here we can see liquidity that has been accumulating since end of February, actually since beginning of February, but it started increasing around the 69K. Those are the speculators that by the end of February turned this into red and heavier, bulkier, it looks thicker, the red with time. And that is not a great sign, guys, because that amount of liquidity, even if it becomes even larger, it's going to be very difficult for price to not hit that. The same narrative we had to go up, and people were telling me, you only use liquidity to go to the upside, you never use it to the downside. And I'm telling you now, that's one great example now. And so it was as well the 87 that we actually hit, and we hit number 1, number 2, and now we're hitting number 3. So this is the third iteration that we're saying, watch out, just watch out, just in case. We might not go there, it's never guaranteed, but if it becomes heavier, you start counting days until you get there, because it could get too heavier to miss. And if I look now, let me see, can I do this on mobile? It's so difficult to move the chart. Maybe I'm putting too much data. Trading different is great, but on mobile it's a little bit of a pain. I wanted to show you the top of the chart, but I won't be able to do it in here. Maybe I'll do it tomorrow in another video. I think this needs a refresh. Let's do it scalping, and let's go to Binance USDT, and we are on the 15-minute chart. Okay, this is shorter term. This matters for the price action we are having currently. For 4-hour time frame, I like to look at the 15-minute, and you can see that the price action went into the 81 that we were talking in the morning, 81.6. It went slightly beyond to 81.140, and it formed a double bottom right there in that liquidation. And we didn't go to the 85.5. That is overlapping. That's kind of the end of the CME gap that we have left over of 2 weeks ago. And my humble opinion, and I can be wrong on this, and I've been wrong multiple times, so I'm not claiming anything in here, is that there is a chance that we go for that 85. And I'm holding on to that idea that we are going to go there during this week. And I can be wrong, just let me know what you think as well. I think that because, and now I remember that I wanted to show you the fair value gaps chart, and that is important today, very important, actually. Let's go into fair value gaps. Fair value gaps, there you go. It is very important that we look at them, because we ran out of the 3 fair value gaps that we were chasing, that we were keeping an eye since the weekend. There was 1, 2, and 3. We killed 2 of them in a go, and there was the 81.600 left, and that one is gone now, right? So we just have a very thin one in here that I'm not gonna care about it, because probably it's gonna be gone by the time you watch this video. And then we have 83.4, and if we can go beyond that, then the next is already 85.8, and that already hits the liquidation levels, the CME gap, all is gone. To the downside, if we want to move now, there is pretty much no move small to hit a fair value gap to the downside. That's the situation where we are. We only have 75. So we could be just, going sideways into the event, or we could actually go for the higher CME gaps and maybe fulfill my call this morning, which was both sides are going to be smashed before or right after the event. That is my call. My call is for volatility and for your stop losses in your positions all getting smashed. And if we go up, I'm going to be looking into profit taking, and my candidate levels are all here overlapping with these fair value gaps. The 85, 86, the 88 is also interesting. And unless I see something really, really, really changing everywhere, then those are my levels for profit taking. And of course, if you are in my Patreon and I need to change my mind because that is changing, you're going to be the first one to know. Have a look in the description if you want to find my Patreon. We have 2 tiers, one with articles and one that on Thursday we're going to do the first private session. I think now we are like 10 people. So we are going to do TA of all coins, and you'll be able to vote for 5 coins that you want to do. And you can do QA, we can discuss things in a private live stream. Have a look at that. That's all in the description if you check for my links of Patreon. And closing this, because it's getting too long, guys. Liquidation levels. This is another argument for my ideas. We can go to upside because liquidity of the past 2 weeks is quite heavy in that 85. 87 is a little bit more aggressive as a target if you are trying to get out. Those are your 2 candidates. There's no more options. If you want to think about 90, you need a little bit of changes in the narrative. You need to see general markets really helping for that. At the moment, general markets are not helping at all, and that's the ugly truth. Look at the news. Look at the news. They are pretty much all bearish today. Michael Saylor buying the smallest amount. That's bearish. Crypto market biggest risks, US recession. Circular crypto economy, bearish. The only one that is bullish, Robinhood shares up 8% after launching betting markets have, but that's a sell the news probably. BTC dominance steadily rising since 2023. Is altcoin season now a relic? Bearish. Bitcoin sees 30% retracement as selling pressure increases in Bitfinex. So we got out of 5 hot stories, 4 are bearish, and that actually could be bullish for the short term, because when they convince everybody to be short, then you look at the fair value gaps and they're all up. Maybe we go up, and maybe we now punish the upper side of the symmetrical triangle. All right, guys, if you like this content, make sure that you hit the like, subscribe, and write down a comment down below. I really, really appreciate that. And I'll see you in the next one. See you tomorrow. Bye-bye.